Today is Sunday, January 26th, and this is another update on my progress beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. I'm still sticking to the same plan that I talked about in my previous update. I'm going to hold off on making any position changes until after Jerome Powell's Fed speech, which is going to be this upcoming Wednesday, January 29th. For upcoming events this week, Monday we got new home sales. Tuesday is going to have the home price index along with consumer confidence. Wednesday we got Jerome Powell's Fed speech. And then on Thursday we have the GDP, which comes out once every quarter. We also have initial jobless claims and pending home sales. And then on Friday, we finish it off with the PCE report, which is the inflation index that's most watched by the Fed. If we take a look at the CME Group's Fed rate outlook for this upcoming meeting in January, there's a 99.5% chance that the rates are going to remain the same. For the March meeting, there's a 28.2% chance of a rate cut. And it's not until the third meeting of the year, which is going to take place in May, that we see a realistic probability for a rate cut. Right now, the chances sit at 66.8%. That's why I'm going to wait until after Jerome Powell's Fed speech this Wednesday to make any more position changes. Because if the probability for a May rate cut goes down and the rate cut gets pushed farther into the year, I don't think that the markets are going to like that very much. This is what the SPY chart's going to look like right now. You can see that the SPY price is still above the 5-day, which has managed to stay above the 15-day as well. On January 15th, the SPY price was finally able to get above this trend line, and it's pretty much gone straight up for the most part since then. If we didn't have the Fed meeting this upcoming Wednesday, I definitely would have already invested some of the cash that I have sitting on the sidelines. I realistically don't think that he's going to be able to say anything that's going to give the market more steam than what it already has shown. And I do think that there's a pretty good probability that he's going to say something that's going to mess up the current trend. I definitely don't think the downward price movement would last any longer than a few days before quickly rebounding and moving higher. So somewhere in this zone is where I'd be looking to purchase. Of course, I could be completely wrong. We have the Fed meeting and the market rips higher, but I don't think that that's realistic. These are going to be all 12 of my current positions. Right now, Meta, Nvidia, Microsoft, PayPal, and Costco make out my top 5. And those are going to account for 46.55% of my portfolio. By percentage, Palantir is my biggest winner at a 17.54% gain. That's an example of a position that I'd really like to be able to invest more into, but I do think that there's going to be a better price to do that after the Fed meeting. Right now, I have 74.79% of my portfolio invested, which means I have 25.21 sitting in cash. Since last Monday, Pershing Square had a gain of 1.6%, the S&P 500 had a gain of 1.73%, and my portfolio had a gain of 2.2%, which brings us year to date. Pershing Square is at a gain of 7.69%, the S&P 500 is at a gain of 3.97%, and my portfolio is at a gain of 3.53%. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.